Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check to see what's going on today and when so that we're not taken by surprise. So if we're looking at the news announcements for today, there's a lot of them. First, medium news announcements at 8:30, the core PPI for January forecasted at 0.2%. We also have the core retail sales, the first big announcement of the day, forecasted at 1%. PPI for January, the next large announcement, forecasted at 0.4%, and retail sales, another large announcement happening at 8:30, forecasted at 1.1%. So big chunk of news coming out at 8:30. A little bit of a lull going into Red Book at 8:55, 9 o'clock with FOMC member Barkin speaking, 9:15 capacity utilization rates. We also have at 9:15 the industrial production, which can sometimes move the markets around a little bit. 10 o'clock has some news with the business inventories for December, as well as the NAHB housing market indexes and retail inventories excluding autos. And then at 1400 later this afternoon, FOMC meeting minutes, as if we needed more things going on to get the markets moving a bit here. The FOMC meeting minutes are this afternoon as well. And because the whole week got shifted off a day with Monday being a holiday, we have the API weekly crude oil stock later today at 16:30. So with all of the news and everything out of the way, now we can jump into some charts for today, being 2/17 of 2021. First up to the list, we've got the NASDAQ, and we finally have our decision. You know, yesterday we were talking about what does this thing want to do? Are they going to hold support here and continue further up, or are they going to break down and get to the bottom of the channel? Well, we got our answer. They dove all the way down to the bottom of the channel and even chopped all the way through to an L3. Kind of giving off a little bit of a head and shoulders vibe going on here, but it's still a bit early. Might be looking to complete kind of that neckline inside of here. As we can see, this dashed dot line is settlement. We haven't really moved very far away from settlement. We're just kind of hovering here. And what would make a lot of sense, and this is something that we haven't seen in a while on the NASDAQ when it dips, is seeing a two-legged correction, right? A lot of times we get these big moves down and then a V bottom all the way back up. What we haven't really seen is a nice 1-2-legged dive to put it back into a zone of support. Major obvious support, we do have a half DP sitting at 13,620, and that is also right around an L4 area. One of the big things that stands out is, more than anything else, buyers are just trying to buy cheap. When we're below the moving averages, when the market is in at least a short-term downtrend with lower lows, lower highs, although we haven't broken any of the major swings, there's an obvious shift, and because of that shift, buyers don't want to buy too high. They're just going to get stuck. So a lot of traders will opt to buy swing lows, to buy three press bottoms, to buy any bottoming type patterns, trying to get in as low as possible to ensure that their locations are optimal. And well, where we are right now, that's not as low as possible. This could definitely go a bit further down towards those 13,620s. Next up on the list is the S&P, and here again, we're just kind of hovering around settlement. There's not really a whole lot going on, but a big thing that is standing out is that we do have some pretty nice L4 support that's resting on top of rising channel support. The caveat to this is that when the market came up towards the highs, and keep in mind, we weren't really sure where the highs were going to be. This was all derived off of these two lows and just throwing it on the high. At the time, during the weekend, we didn't have any of this. So it's kind of guesswork. You know, where is it going to respect it? I don't know. We'll have to kind of wait and see. We come back from the weekend and it opens up above it. Okay, well, I guess we're breaking above. Buyers try holding it as support, support. Tries to get that rally back to the upside and pulls back, and no more support. And now the market's fallen down. So a lot of times when you have that overblow on the highs where they try to break above the structure and fail, they usually have an equidistant blow off. So if you measure up the highest point that they blew off above the highs, it's usually the distance that they'll blow off below the lows. So although we do have the channel low sneaking up on price along with an L4 and a couple other factors to definitely be paying attention to, don't necessarily lose sight of the fact that we did have an overshot on the highs. It wouldn't be a surprise to see it overshoot the lows as well. And given the fact that we have a half DP at all of that structure down there, 38.90 looks a lot more interesting. Then over on gold, we've got some pretty big movement going on with this big dive lower. Buyers tried getting a V-bottom. The V-bottom failed, ended up being a V-top, and now we're rolling all the way back lower. This could potentially be setting up, in and of itself, a new type of descending wedge, which is going on here, right at the bottom of the larger channel. And notably, the other caveat to this is that settlement price, comparative to where actual value is, right? Settlement price being this dashed line just underneath 1800. We're going to be opening up way down here underneath, right? Remember, when you're opening up underneath specific levels or gapping above them, we're going to be gapping below the bottom of this channel. So a lot of times, just like we saw on the highs of the last chart, we might see sellers trying to keep this going, but if they fail, that's where you see it overblow and go crazy in the other direction, because it not only has to get back to the highs of the channel, but it has to overcompensate because of what happened down here. So if the sellers can hold on, they still have a reason to keep selling. But if that selling pressure loses, well, it's pretty much game over at that point. Next up, we've got crude oil, which is attempting to break outside of the descending wedge, finally breaking above some of this falling resistance. The big objective for buyers, obviously, is holding above the $60 mark. The $60 mark is no joke, and the fact that we gapped basically up on top of it over the weekend, sellers tried to break lower, and now they're failing. Not looking great for the sellers here. Bulls are definitely looking to take back over on dips with the major objective back to the highs towards 61, potentially even further, especially considering the fact that the sellers have now failed down here. That's a really good sign for buyers to try to carry this back up. If the buyers do fail, then we'll likely see this really take off to the downside with a couple legs, because that's going to be kind of an unanticipated move. It's going to take people by surprise at this point in time. Given what given the information that we have, it's more likely we see it go up. So if all of a sudden it goes rocketing to the downside, well, that's going to shift gears a little bit. So buyers will be looking on previous support down here in the 58.72s, but where it stands, if it does want to break a little bit lower, we may also have a channel to work with, and if we can get that time-wise to line up nicely with the base of that on a dip, then that would be the hot spot. But for right now, it looks more like buyers are going to try to hold on to this area and try to rotate it back up. And keep in mind, inventory day can make things that would normally take all day go in a couple minutes. Then swinging over to the euro side of things with a very nice descending wedge working its way lower. Hyper aggressive move to the downside. And when you have this kind of aggression with a big bear leg, a lot of time traders will be looking for a measured leg, which is kind of what makes sense here. We're landing directly on top of that measured leg. Not only is it landing directly on top of the measured leg, but we have a descending wedge, which is breaking lower. That's not very high probability to succeed. It's very difficult. It takes a lot of money to make a bear pattern break lower, especially when it's this aggressive of a pattern. It's going to take some fundamental news to make that happen, and so far there really hasn't been any. So we've got a major area of support. We've got a -1 DP, which by itself has a good 65% likelihood of holding the market back above it by the end of the day anyway. We couple all of those things together, and it's fairly obvious to see that buyers are trying to put in a little bit of a bottom here. It's still early, right? We haven't even seen the knife hit the board, really. It still could be potentially falling. So don't go juggling knives by any means, but be, a little bit more cognizant of the fact that the low could be sooner than later as to where things are kind of setting up. Next up on the Bitcoin move here, we've got 50K. We finally broke 50,000. That was the big thing that we needed to see yesterday. If you remember, we were talking yesterday on how the last thing that we wanted to see it going to 49.99.99 and then collapsing another 80% dive like it did at 20K. So the fact that we broke above 50K was a great sign, even though it immediately pulled back. That doesn't matter. The fact that it was able to puncture that balloon, if you will, kind of deflates it. And anybody who's looking to sell that zone in anticipation that it's going to fail and cause that big drop, they lost all of their reasoning to stay short. In that dip, usually means that that's more likely shorts who are getting out than anything else. And then we see it ramp all the way back up to the top of the channel. So now that we're at the top of the channel, we're back above 50,000. In fact, it's actually going into 51,500. We're starting to get into this squeeze territory where if there's going to be a lot of shorts and a lot of shorts want to hold price down, what better spot than 50K? Well, now 50,000's breaking. That's a problem. So if shorts were looking to sell, they see this big bear bar, maybe it just wanted to pierce it, so they sell here. That fails. It's getting everybody involved, on the short side at least, in the wrong places, and they're just getting dunked every time it happens. And that usually is when you start seeing a squeeze. We haven't really seen a big move so far today. It's not even at a half DP up or down for Bitcoin. That's kind of crazy. So we need to see a bit more volatility anyway, and the fact that we're coming off of a major profit target area, it'd be likely to see some profit taking going on up here at the very least, assuming nothing crazy happens, and then we start seeing it pull back towards the lows of the channel. If it does start catching that breakout move to the upside and squeezing, that's when things could go absolutely bonkers to the upside. And then finally, over on Ethereum, we've got a nice rally back to the upside. Buyers bought the dip. I know, what a shock. BTFD on crypto. Who would have thought? We've got a nice rally back to the upside. The wedge lows are holding nicely. We put in a settlement relatively low at the 1740s and then immediately popped right out of there with that continuation back up. There was no hesitation. It's not like there was any, oh, well, we're going to meander our way up here. This thing strapped the nitrous to the floor and just let it rip. It's been screaming to the upside all the way now to the highs of the wedge. Hasn't broken any of the previous highs yet, really. What would be good would be breaking some of these larger ones. What would be even better would be breaking some of these previous structural swings, right? The last confirmed swing, that's up here. Still has a little bit of work to do. That's up in the 1850s, 1860s. If it can start breaking above that area, then we have a confirmed trend shift with a higher high, higher low. And, well, from there, it's off to the races back up towards 2,000. And who knows after that? Ethereum could go absolutely crazy. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a great trading day, and until the next one, we'll see y'all then. Thanks.